Hi guys, so I'm just doing this quick video on a trade that I took yesterday. I've still got half a position running, and I scaled in some more positions this morning as well, which again I've taken some profits off the table. So I got in here yesterday afternoon in New York, uh, and then New York closed. I closed half of this position out, so I took profits on half of that, leaving the runner overnight in Asia. And then this morning in Frankfurt, stroke London, I managed to get a couple more positions in. I then scaled out half of these positions again, and I've got the other two halves running, hopefully to see a bit of downward continuation into New York today, if it pans out, that is, of course. So my reasons for taking the trade, first of all, yesterday morning we'll go to, I had identified that we had Frankfurt Open, CPI news for the Great British Pound. So having seen that, I knew it was going to be explosive, and I knew that we'd see a lot of manipulation taking place, followed by the likelihood of a trending London session. So for that reason, I thought I'm not going to entertain it. I'm just going to stay off the charts, come back to New York, and then try and either catch the continuation or look for a reversal, dependent upon where my custom afternoon profile chart levels were and order flow as well. So that was my logic for yesterday morning. Let's get rid of this news chart. Right. So now, for demonstration purposes, I've just pulled up this 4-hour candlestick chart, and coming into the afternoon session, we can see historically we're coming up to this high here. We have the lower high here where there would be liquidity sitting above. So somewhere in this area, you would be looking for, no doubt, an area of supply. If you're a smart money concept trader, you'd be looking for your order blocks and things like that, breaker structure, etc. However, we as institutional traders using market profiles, VWAPs, and order flow with the footprint charts have a ton more data that's accurate for us to analyze and find better confluences and better reasons to get in a trade, rather than just looking at these naked candlestick charts, which, don't get me wrong, they have their uses to a certain extent, but you don't get much information, do you, looking at a naked candlestick? So I'm going to now show you all the rest of the confluences. And as you can see, this red dotted line there, horizontal line, you can see that's where we rejected yesterday in New York. There. Right. So let's get rid of this yucky candlestick chart. Let's get down to business. So first of all, this chart here is the daily chart. This is the daily market profile chart, split up into 15-minute TPO blocks. And I've drawn this green rectangle out there as my area of interest stroke supply, where I'd be starting to look for a place where price may be wanting to reverse. And let's now just try and scroll back historically. I'll just keep going. What we got now? September last year, August of last year. Oh, we've gone too far. Bear with me, guys. Somewhere, there we are. And now, as you can see, this was where I drew my area of supply. The edge of this ledge, and we have a thin profile there. So I thought that was going to be a good area of support, having cleared this poor high previously. And if you look at the date, which is quite interesting to note, I just can you see that there? So the 17th of the 7th, 2023. See that? So this is the profile that was being referenced, the 17th of the 7th. And the date yesterday was the 17th of the 7th, 2024. So a year later, this to the day this profile was being referenced. So that was where I drew my supply box out. If I scroll back to yesterday, to the current profile, you can see we came up into that area. Like so. So that was what the daily profile looked like. So I had a confluence there, but I also needed more confluence. So again, this is one of my custom afternoon charts. I could see price opened here at midday. This green box again, I drew out, and that historically was at a value area high. So that is in confluence with that. And I'd be looking to see the rejection from there. But I need more confluence again. I could also see on the VWAP chart, which is this one here, we had these blue blocks going dark coming into that afternoon session. So I knew that we had extreme delta divergences taking place. So the likelihood of a reversal was highly probable. And we were trending up, hugging the deviation band extremes. So there was another load of confluences, but I want more confluences than that, don't I, of course? And then we could see here, so where this green box is, in this green box, we could see this red line there, which is my market depth historical graph that I set up and calibrated to specific order sizes. And that tells me that there is large volume of resting passive limit orders sitting there. So I was like, wow, that is an alignment with this, an alignment with this. We know we've got delta divergences coming into that area. So I thought there is going to be institutional limit orders sitting here where the whales are going to be looking to get filled and then start entering the market. And then as you can see, my absorption study started to trigger as well. Absorption, which is of aggressive buying coming into the area of interest, absorbed by passive sell limit orders, and then the market started auctioning down. So having seen this as well, I was very, very interested in looking for a trade. So we got so many confluences already, much more than if you're just using your standard, smart money concept techniques and all that sort of jazz. But I want to see what's going on inside my candlesticks now. So let's just make this bigger, shall we? So this was yesterday. Yep. Get this up. So we can see coming into the afternoon session, those delta divergences, we've got a lot of buying activity, increase in volume taking place. We then get a rejection. And then the afternoon chart opens. So I'm looking for the area to enter the market. And as you can see, we came back up, rejected with massive amount of sell side delta and volume, creating this horizontal box, which is one of my stacked imbalance studies. Again, I calibrate it in order to show the best stacked imbalances. So having seen that, we started auctioning down, pulled back up in towards the stacked imbalances where we got the standard deviation. I entered my positions. Initially, my stop loss was just above this high. So had we had traded higher, that would have invalidated my trade. But I was very confident that we're going to see some downward momentum. So I've got my position in. And the rest, as they say, is history. And then we just carried on auctioning down. That stacked imbalance held. Then we came down into towards this area here, this stacked imbalance, which was coming into New York close. So for that reason, I closed out half my position in this stacked imbalance because I thought we might see a bit of a bounce. And as you can see, we consolidated around there throughout Asia. And now we're on to the current day. So just to recap, we've got this area here, which is my area of supply, which was from exactly 1 year ago. We've also got this area here on the custom afternoon session chart, which is my area of interest as well. So that pairs up with that. Two confluences. We've got the VWAP chart with Arenko's study showing delta divergences. So that's another confluence. We've got these resting limit orders sitting here on this chart with absorption being triggered. So that's another couple of confluences. We've got the footprint chart, another confluence. I can also pull you over, don't normally do this, but I'll pull you over another one of my VIP charts, which is a custom US index chart, a bit like the DXY, I guess. And we can also see on this chart, I had a confluence as well. Inside my course, I go into detail how you read and understand all these charts, but we came down to this area here. So that area there is in alignment with that area up there because it's a DXY, as good as it's the way I customized it, and we rejected from there. So I had that chart as well as confluence. And then coming into this morning, so we'll just pull over another chart now this morning. So this is this morning's chart. I was looking for further continuation to the downside. We opened here in Frankfurt, came down. I saw that we'd broken through this area here, which is called a single print, and created, if I make this bigger, I'll just delete this box for you. Sorry, let me move this out of the way and mark the screen. So having seen this come down, trade through the single print, creating here, see that little dotted line, another single print on the way down. I thought I'd wait for a pullback in towards this area and I'd then start looking for another position to get short. Let's just draw that out. We've also got here a low volume node. Single prints, double single prints, break and retest if you want to call it that. Drop, base drop. And we've got here high delta previously taking place, another one of my studies. So this was going to be an area of supply for me this morning. I could also see here deviation band extremes with a flat, fairly flat VWAP. So I'll be looking to fade back down towards the other side of the deviations. So I've got these positions in, took profits down here on half these positions, and I've still got two halves running, which I'm hoping we might see a bit of a pullback, and then we might see a bit of lower continuation if this VWAP holds, that is, of course. And also I could see on the footprint chart a whole ton of selling taking place, pull back up. Again, that box there is my stacked imbalance study. So we've got to pull back up into this stacked imbalance, enter my positions. There we go. So that's about it, guys. That's my reasoning for taking the last 2 days worth of trades. I hope you got a little bit of value from that and a few insights into the way in which I use these institutional tools in that allows me to navigate the markets the way that I do. With all that said, I hope to see you on another video, and I'm going to close this one off now and hope you have a good day. Many thanks, guys.